Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, everyone. Welcome to A Dysfunctional America. I'm Ira Epstein for this Thursday, the 18th of January, 2018. And I say that because here we are just around getting to 4:45 in the afternoon. I'm watching a circus. And I hate to say it, it looks like a circus at the House of Representatives as they're debating the extension bill. It's not about the House of Representatives. It's about all of government. I mean, they can't get anything done. Midterm elections are coming, and the market realizes what's going on, but the politicians think we're all dumb and that we don't understand that they're all fighting for their votes right now. It's not about keeping America, settling things up. It's the weirdest thing I've seen. I rarely say that, but if you watch this, it is a circus. The stock market thought so today, too. There were so many whipsaws in that market intraday. They were going back and forth, and that's because one moment, well, President Trump had changed his opinion. Now the child health care, yeah, the 6-year extension sounds fine. I promise you, go to this morning's news. He was written about it, and there were words that, no, he didn't really understand that they weren't talking an extension for 30 days. It was a 6-year extension, and maybe the president had to rethink that. That all changed during the course of the day. This is politics at its best from every level of it, and who knows where we're going to carry tonight. But you could wake up in the morning, maybe the House doesn't pass anything, and God knows where the Senate then can be. It can't go anywhere without the House. So we'll see what goes on. But you had a day where the metals got weaker, the dollar weaker, certainly stock indices gave up, and you're still getting an interest rate increase in the real markets. You're over 2.6% on the 10-year. Now, when you look at the weekly area chart of closes, up and away. If you're paying attention to the economic data flow that I write about and I publish for my subscribers, it is certainly bullish on every front, all over the world. Even China came back to big growth, nearly 69% for the year. That's pretty darn good numbers that they're doing. 6.9%, not 69, 6.9. I think I said 68.8 in the other video. It's 68.8 or 9%, 6.8 or 6.9% growth. It's big, nearly 7%. They beat the expectation of the market. Interesting. And by the way, as they go, so does many parts of the world that use products that they buy from. We'll see if they're able to continue that. They say they can't. They say they'll back off, but you don't know. What I can tell you is look at how the narrowness of this market is coming in again. It just means that we're into a stall right here. The pattern is still bullish as can be. Ask you a question. Since the November election, how much do you think, since the election results that night, how much are the S&P, the Dow, and the NASDAQ up? Just about 40% as of today. Pretty big rally that we've had since President Trump got into office. And you see that, by the way, in all this, obviously. But the market is still in an uptrend. The 18-day average is rather far away, but it's about to get to the point where it can cross over this number. Now, the last time we got to a number where it could hit, it came down here, and that found its support and took off again. We'll see what happens on this one, but you're looking for that number to get closer to price action over time. When I look at the Bollinger Bands, you've been riding the bands all the way up this whole time, and that's a sign of bullishness, especially when you put it in with the momentum oscillator called the slow stochastic, where it's embedded. Now, what does embedded mean? And this market, by the way, has been embedded almost, other than this brief period of time here and one little spell here. Literally in part of November, the beginning of December, most of the time it stayed embedded. Embedded means you've converted a market from being overbought to locking in a trend, and you've certainly seen that with price. The other part that often happens, often, not always, it'll hug the upper Bollinger Band as that happens. Yes, you break away for a short while, but The thrust that accompanies a momentum like that is interesting. There's this phobia in America that if you don't get in, you're going to miss the play. I think you realize that. I've been writing about it in my newsletter, how much money's coming out of the different money markets in order to join these markets, how people have abandoned VIX strategies because they didn't work last year. Well, you know, I'm not saying you can't go higher. I am just saying I also notice what's going on. In the NASDAQ, as long as you don't take out 67.44, you still have the pattern of higher lows, higher highs with the embedded reading. That's good. The Dow, the same thing, and you finally crossed back underneath the upper Bollinger Band. But none of those look weak. The only one of the indices that has thrown out the warning sign has been the Russell, which tried to hold those Bollinger Bands, had a huge reversal day down, and it's trying to correct a bit. Correcting is not converting a trend. Do we understand that? It's just maybe it gets to the 18-day average of closes near 1562. Maybe it finds support there. The momentum, that bullish part, has been lost on the embedded reading. And yes, often when you lose that reading, prices go back to the 18-day average. It is still what I'm expecting. The one thing that I teach, and one thing I want you to know, when I teach my charting course in the videos, I often take off the name of whatever it is because I don't want you to be influenced. You know why? If you were to look at this chart, you'd look at that and you say it's pulling back, you'd say, it looks like a small correction is coming. That's all. When you go to the VIX, we've now got 3 days in a row over the upper Bollinger Band. In the past, we've just spiked over that number and returned very quickly to the 18-day average. Instead, something different is happening here. You're pulling that 18-day average up to the 100. So if you break, that still looks to me like it's going to be an important area for initial support. Whether it holds, I don't know on breaks, but you could also get what's called a bullish crossover. And if that works, and by the way, you had a bearish crossover here where it got underneath, and notice how the market fell back. If you get that, you could even get more. But 3 days in a row over the upper Bollinger Band often begs that the market get to the right-hand side of that rather quickly. When we come over to the TLT, and this is obviously the popular ETF on the interest rates, lower highs, lower lows, bearish. Momentum pointing down, bearish. The market's under the 18-day average of closes, bearish. You had a bearish crossover where that 18 got under the 100, and the market is still, first of all, plunged afterwards, and now it's still continuing down. T-bonds went back to the lower Bollinger Band after a short rally. Here's the market trying to rally up. We're looking for just about the 18-day average, and that's it. When you're under it, and this is what I teach, when you're under the 18-day average, often, not always, markets try to get back to a key moving average and use that as like a neutral zone trying to figure out what next. You had an outside day down yesterday. If you continue down, the next support on this particular chart is the 149.16 level, as the 100-day average is above the market, and so is the 18. And you tell me what you did today. Now you're oversold. So maybe you're getting ahead of yourself now in the market, and I would expect to see some of the pros take money off the table. On the 10-year and the 5-year, it's a little different. As you get closer to what the Fed actions will be, more influence is given on those two different instruments. You're riding the lower Bollinger Band. You're coming down. I went and looked before I did this to get an idea as to what people are thinking about future interest rate hikes. And it's still, 2 are solidly baked into the market. The third, about a 40% chance for 2018. And that's on the CME FedWatch page if you take a look at it. They don't say that. You got to look at the percentage numbers. Lower highs, lower lows. You get under the band, then you bounce back over it. We'll see what happens. Yesterday we closed underneath the band. No, right on it. I take that back from the looks of it. So today's day 1, maybe day 2. I didn't look to see where the decimals are coming in, but that should be about it. Eurocurrency. You got up to the upper Bollinger Band, you pulled back to the right-hand side. That's how you read it. The market had a big outside day down yesterday, tried follow-through today, made a lower low, but came back up. Now, it's overbought. Overbought could do one of two things. You either start more of a downside correction to work that off, or you embed, which means you're going to take the red and the blue lines up and over 80 for several days in a row. You haven't even gotten day one of that, so you're just overbought. In the British pound, 4 days in a row over the upper Bollinger Band. This begs a market that's ready to give a correction to the right-hand side of that band. It is a bullish sign that the market is staying this strong and over it. So you don't read more than that. Do I think the pros are stepping out of the market up here? Yes. The odds of staying over that upper band tomorrow are 1% if you use a rule of thumb of this. These black dashed lines are meant to do what? Keep the market trading within it 95% of the time. But in order for the market to break out, you typically have to have something in the way of sideways action. Go back on your charts, don't believe me, and take a look. From there, the power, it's like, as I've taught you, think of this as a pipe and you're winding up in it. And this isn't the prettiest one. Corn's the really pretty one right now. The market breaks out. Day 2 up, day 3 up, day 4. I won't be surprised to see it try to get back under that tomorrow. Doesn't mean it has to break a lot. It's a sign of strength that you've had a breakout and you're trying to embed. Both numbers are over 80 today. Both were are over 80 yesterday. Tomorrow's the third day where it can do it. Often you don't. That's why I'm explaining this to you. Japanese yen. Outside day down after having a number of days over the upper Bollinger Band, and you can go back just like in the pound and count. 1, what was this day? 2, you were over it there. This day, you were 90.33 versus 90.23, 4 days. And then you get that break. That's the 5th day, and you're getting a little follow-through. That's what I'm trying to just point out to you. I am not calling the markets here. My job for you is to teach you probabilities and no more than that. No more than that. That's all that these are about right here. So support starts at the 100-day average, maybe works down to the 18. You have an overbought market at this point too. Bitcoin. This is classic. If you remember what I just said, try to understand that the British pound wasn't the best looking of the sideways action. This is what that sideways action looks like. You try the downside, you went nowhere. You went to the upper Bollinger Band, you went nowhere. You came back down. This is also a market that was under $10,000, I think 24 hours ago. It's back up pretty strong. It's crazy as to what this all does. Then we get to the energies, and what I was trying to explain, and I think I did a reasonable job for most of you, as I said, you have to look within the market, sometimes not at the prices themselves. And what did I mean by that? I was showing the difference between Brent and WTI on this. And we had run up to the most we have done in I don't know how long. It's been years, I think. It's $6.40. And what has happened is you've taken that back down $5. And one of the reasons for that is when you get a premium this big and you add shipping costs into US WTI crude, it makes it very competitive to certain refineries all over the world. So what happens here is you start getting the U.S. oil start strengthening against the Brent. The Brent has also lost its embedded reading today. The odds favor this market's going to try to come back down to the 18-day average unless it suddenly gets a spike tomorrow. I don't see what's going to make it spike tomorrow. I'm guessing that you're going to see, in the U.S. at least, more rigs go to work. That, if you don't, it's probably a little bit of a bullish sign, but I'm expecting that they'd be there with these high prices. And now the question we keep hearing is, when is OPEC going to start releasing more oil? In other words, cut back on its production. We'll see. The WTI hasn't lost its embedded reading yet, but my guess is, and it's just an educated guess, that if you take out 63.31, you'll have a pattern of lower highs, lower lows that might carry back to that, and that would become a target if you lose that embedded reading. So we'll see if that's going to happen. The strongest market in the sector is gasoline. Look at how strong it's become. And it's a little early, but hey, maybe the market's thinking about spring weather already. In the nat gas, you were everywhere today. Look at the size of this range. You fell back, found support at the 100-day average and bounced away from that. The market is also at the point right now where we're looking at a market that is overbought, not embedded. So it's a bit rich in price. It's been in a nice uptrend. If it cracks through this area support, probably back into the area right through here if it can go up the upper Bollinger Band. And the trend is up at this point, but you're overbought. Want to remind you about our futures trading kit because it has so much information in it. All of our traders' guides. You're going to get 12 different popular chart patterns. You're going to get the information on our charting services, our research. When I write a gold report, you'll be getting that. And I haven't written one this year, so I'm overdue to do it. Our technical guides, 1 and 2, about technical indicators, each one about 20 pages plus in it, full color, really cool. And I make it look like this a DVD we're sending you. Nobody sends DVDs anymore. What you do is you send the link and it opens up, and that's exactly what it does. It opens up and you get all this. So if you'd like to try this out, do so by giving us a call, 866-973-2077. You can go to our website, www.iraepstein.com. You can also, if you're watching me up here, you can go up here. You'll see an icon link. Click it. If you're watching me on YouTube, it'll take you right to our forums. Or underneath us on many websites says, click here for Ira's free information. I'm Ira Epstein. Tired of talking. Have a good day.